Hi, I'm Dr. Demetrius Crane with C Accounting, and I would like to say thank you for joining us and taking the next step to learn more about church compliance. Today, we are going to be covering 4 topics. We're going to cover the IRS compliance, we're going to cover church audits, we're going to cover information on corporate policies, as well as taxes for the church. Let us go right into the first topic. Internal Revenue Service compliance, IRS compliance. We want to make sure that your church is in compliance with the Internal Revenue Service. It is very important that we understand some of the simple things that we can do to maintain compliance with the Internal Revenue Service. So some of the topics that we're going to cover are payment of dividends, unreasonable compensation to insiders, transferring property to insiders for less than fair market value, and private benefits to insiders or non-insiders. Now, churches and religious organizations, like all exempt organizations that are 501c3, are prohibited from engaging in activities that result in an earnment of the church's or organization's income or assets to insiders. And so you may say, well, what's an insider? An example of an insider is a person having a personal and private interest in the activities of your church. Insiders could include the minister, the church board members, officers, and any certain circumstances, employees, for example. Examples of prohibited earnment include the payment of dividends, the payment of unreasonable compensation to insiders, and transferring property to insiders for less than fair market value. You are prohibited against earnments to insiders is absolute. Therefore, any amount of an earnment is potentially grounds for loss of your tax exemption. So it's important that we really understand the business that we provide to insiders and how that affects our 501c3 tax exemption as a church. In cases where the 501c3 organization provides an excess economic benefit to an insider, both the organization and the insider have engaged in an excess benefit transaction. The IRS may impose an excess tax on any insider who improperly benefits from an excess benefit transaction, as well as on organization managers who participate in such a transaction knowing that it is improper. An insider who benefits from an excess benefit transaction is also required to return the excess benefit to the organization. We want to also talk about private benefit. In IRS, a 501c3 organization such as a church, activities must be directed exclusively towards the charitable or the religious, whatever your exempt purpose is. Such an organization's activities may not serve the private interests of an individual or organization. We talked a little bit about that, the private interests of insiders. Rather, beneficiaries of an organization's activities must be recognized objects of the charity or the community at large. Private benefit is different from an earnment to insiders. A private benefit may occur even if the person that is benefiting are not insiders. And let me say that again. The private benefit is different from an earnment to insiders. Private benefit may occur even if the persons that is benefiting are not insiders. Also, private benefit must be substantial in order to jeopardize your tax exempt status. Our next topic is on church audits. I get this question all the time. Why will the IRS audit my church? What are some of the things that I can do to not receive an audit from the Internal Revenue Service? So let's talk a little bit about church audits and how it will affect your church. There are special rules limiting Internal Revenue Service authority to audit a church. Congress has imposed special limitations found in Section 7611 of the Internal Revenue Code on how and when the IRS may conduct civil tax inquiries and examinations of churches. The IRS may begin a church tax inquiry only if an appropriate high-level treasurer official reasonably believes, on the basis of facts and circumstances recorded in writing, that an organization claiming to be a church or convention or association of churches may not qualify for exemption, may be carrying on an unrelated trade or business, may otherwise be engaged in taxable activities, or may have entered into an excessive benefit transaction with a disqualified person. So let's talk about reasonable belief requirement. The IRS may begin a church inquiry if there's a reasonable belief requirement based on a written statement of the facts and circumstances that the organization A, may not qualify for the exemption, or B, may not be paying tax on unrelated business or other taxable activity. This reasonable belief must be based on facts and circumstances recorded in writing. Keyword, recorded in writing. So what are some of the things that are recorded in writing? The IRS can obtain the information supporting a reasonable belief from many sources. Now, I want us to understand that these are sources that are written sources. For example, you have the newspaper or magazine article. You have a television or radio report. You have the internet, web pages within your website, voters' guides created and or distributed by the church, documents on file with the Internal Revenue Service. For example, your 990T filed by the church, and we'll go into more of your tax-exempt 990 form. Reliable information reports from concerned members of the church or the general public. The IRS must derive the facts and circumstances forming the basis for a reasonable belief from information lawfully obtained. So this is information that came from all the sources that we just talked about. Information that came from the newspaper, information that came from the television, information that came from your website, information that came from items that was passed out in your church. These are lawful information that is obtained from the Internal Revenue Service. And one of the biggest items that I want to discuss, and this is the last item, simply failure of the church to respond to repeated IRS routine requests for information. This is one that causes churches into audits most than any other items that we've talked about. Simply failure to respond to the Internal Revenue Service. When the Internal Revenue Service sends a letter asking for information, please respond in a timely manner. That will stop most audits as it relates to the church. The next topic is corporate policies. And we're just going to talk about 4 corporate policies that are must-have in your church today. The first will be the accountable reimbursement policy plan, the conflict of interest policy, the benevolence fund policy, and your facility rental policy. 4 important policies that you must have handy at any given time when it comes to church audits and just compliance. The accountable reimbursement plan is simply an arrangement that your church has established to reimburse you and your employees for all business expenses. This must be put in writing. You have to have in writing if your church has decided to reimburse you for your travel, for your gas, for your car rental, for any expenses that you and your board have come into agreement, has to be put in writing, and it has to be in your what we call an accountable reimbursement plan. The next policy, which is very important, is your conflict of interest policy. A conflict of interest exists when someone with a fiduciary responsibility is in a situation where their own self-interest and the interest of the organization might be in conflict. A common example of a conflict of interest comes up when a board member also runs a business that sells something the organization might need and has a chance to influence the purchasing decision. Churches are often advised to have a written conflict of interest policy. The next policy is the benevolence fund policy. Church benevolence programs are those that provide for the basic necessities of life to a needy person, whether in your church or outside of your church. This would include food, clothing, shelter, medical care, other types of assistance to the poor. A church can give cash to a needy person from the benevolence fund. However, as with all other benevolent gifts, the purpose of the funds must be to provide for the basic necessities of life. So we're not giving items that are not the basic necessities of life in your benevolence fund. We recommend that each church establish its own written benevolence policy. An appropriate policy would include the following items: description of the purpose of the benevolence program. So describe your benevolence program. A criteria to be used to determine whether a person qualifies to receive benevolence gifts. Identify employee or pastor of the church who is responsible for approving the benevolent gifts. So you need someone to sign off on the benevolent gifts. And identify amounts or types of gifts that can be made without approval from the board. This policy is really important when it comes to corporate policies. We believe that all churches should have this benevolence fund. And it's not just our belief, but it's also a belief that comes from the Internal Revenue Service. If you are audited for any given reason, one of the things that they will ask you for would be for your benevolence policy or your conflict of interest policy or even your accountable reimbursement policy plan. And we want to just kind of add to that list your facility rental policy. And that's just one that we've added. It's not one that you necessarily need to have, but it's good to have that facility rental policy handy just in case you're wanting to possibly rent out your facility. Okay, so the next topic we are going to discuss today is on taxes for the church. What are the taxes that the church is responsible for? And so we have 3 topics that we're going to cover. The first is going to be on unrelated business taxes, and the second would be employment taxes. And then lastly, we're going to talk a little bit about minister taxes. What are some of those things that as a minister you should consider in your taxes? So, unrelated business taxes. Even though an organization is recognized as tax exempt, it still may be liable for tax on its unrelated business income. For most organizations, an activity is an unrelated business if it meets 3 requirements. It's a trade or business, it's regularly carried on, and it is not substantially related to furthering your exempt purpose as a church. So, for example, unrelated business income is when you have a church that owns apartment complex and you're receiving rental income. Well, that rental income is taxed and it must be filed on Form 990T every year. That's an example of unrelated business income. The rental income is not related to your church purpose or to your church as a church related activity. An exempt organization that has $1,000 or more of gross income from an unrelated business must file your Form 990T. An organization must pay estimated tax if it expects its tax for the year to be $500 or more. Okay, so that's unrelated business tax. The next item will be your employment tax. Tax-exempt organizations have important responsibilities as employers while operating and managing their activities. Before an organization becomes an employer and hires employees, it needs to have a federal employer identification number, your EIN number, and determine if they are hiring independent contractors or employees. An independent contractor, as a general rule, is that the church or your exempt organization has the right to control or direct only the results of the work done by the independent contractor and not the means and methods of accomplishing the results. So typically, if you can control or directly have say so as to the results of your independent contractor or your person of hire. So as a church, you want to be able to determine whether you have an independent contractor or whether you are paying an employee. Now, of course, if you are paying an employee, you are going to have federal income tax, and you're going to have Social Security and Medicare taxes that you have to make sure that you pay. Now, I would suggest that you contact your payroll specialist when it comes to your employment taxes. If you are paying a person as an employee, I would suggest that you have a payroll consultant. Then that way you're sure to make sure that you pay all of your taxes that you're responsible for as a church, which are basically your typical payroll taxes, your FICA, your Medicare, your Social Security taxes, and those taxes have to be paid on a quarterly basis for most organizations. Our next topic is on minister tax. What are the taxes that's responsible as a minister? Well, we first have to determine what is a minister in the eyes of Internal Revenue Service. A minister, according to the IRS, ministers are individuals who are duly ordained, commissioned, or licensed by a religious body constituting a church or church denomination. The criteria the Internal Revenue Service uses to determine who is a minister are not necessarily the same as those used by churches and denominations. Whether or not one qualifies as a minister for tax purposes is a very important question. According to the IRS, ministers are individuals who are duly ordained, commissioned, or licensed by a religious body constituting a church. They are given the authority to conduct religious worship and administers ordinances such as baptisms and communions. If a church ordains some ministers and licenses or commissions others, anyone licensed or commissioned must be able to perform substantially all the religious functions of an ordained minister to be treated as a minister for Social Security purposes. You may visit the publication 517 for more information on minister taxes as it relates to the Internal Revenue Service. In most cases, for federal income tax reporting, most ministers are employees. Form W-2 is received from their church at the end of the year. The tax code treats ministers as self-employed for Social Security, even if they report their income as an employee on a W-2 form. This means that ministers are required to pay self-employment taxes unless they file Form 4361 to opt out of self-employment tax. So it's very important to understand that Form 4361 has to be filed with the Internal Revenue Service in order to opt out of paying self-employment tax. Our next topic and final topic is on the housing allowance. The most important tax benefit available to ministers who own or rent their home is the housing allowance exclusion. A housing allowance is simply a portion of a minister's compensation that is so designed in advance by the ministering employed church. For example, when it says that it is designated in advance, that means that if you are going to receive housing allowance, you have to have this documented in your minutes to your board in advance before taking the housing allowance. So let's say that you plan on getting housing allowance in January of the following year. Well, this has to be documented in your minutes of your board meeting, which means this has to be something that you discuss in your board meeting and you determine the amount prior to January. Typically, this happens in December of the prior year, so that when January of the next year comes in, you will have this amount documented in your minutes. This is very important because as the Internal Revenue Service comes in, and if they decide to audit your housing allowance, they're going to want to make sure that this was declared in advance and that it is being used for housing expenses. So you can't decide in the middle of the year that you're going to change your housing allowance, add to, or take away. You want to make sure that all changes to your housing allowance is clear, it's documented, and is used for your housing allowance. And those changes are documented before January 1st of the next year. So a housing allowance, once again, the tax code specifies that the housing allowance of a minister who owns or rents a home is non-taxable in computing federal income taxes to the extent that it is declared in advance, is used for housing expenses, and it does not exceed the fair rental value of the minister's home. So it has to be declared in advance, used for housing expenses, and it cannot exceed the fair market value of the minister's home. I'm Dr. Demetrius Crane with Sea County, and I hope that you were able to receive all the information you need to keep your church in compliance with the Internal Revenue Service. Until next time, my prayer is that you are successful in all that you do.